Hi, I'm Premium Wireless, $15.
Alrighty, we are live from Columbus, OH. This is the Ramsey Show Aftershow. Coach Steve Money, your host. Alrighty, we are okay. Audio working, excellent. I think I've done everything correctly today. I have the camera in the right place. And I even got it to the right question on the questions. All right. So I am Coach Steve Money. I'm a Ramsey Solutions certified financial coach. And if you, yes, you have money problems or you just want to make sure you're on the right track, you can schedule a free financial coaching consultation / assessment with me at calendly.com / Coach Money. That's in the ticker below and also in the video description. You're watching this on youtube.com / Coach Money. And if you just scroll down on my main page past the Oak Island playlist, you'll see the Ramsey Show Aftershow Show playlist. And today is number 461 of those. Looks like I didn't add 460 to this playlist. I'll fix that later. And the Answering Your Financial Questions playlist, that has 137 shows in there. And there's 11 Ramsey adjacent songs in the music playlist. Listen to those if you are so inclined. Market report. Market closed today, but the futures. There we go. All right. The futures look good for tomorrow, going up on Inauguration Day. Let's see. I saw some earnings. Who's reporting? Tomorrow, Netflix is reporting. And on Wednesday, Johnson & Johnson, Procter & Gamble, GE Vernova. I don't know what that is. Is that General Electric? I don't know what the Vernova part is. And then on Thursday, Texas Instruments. But as I said, market closed today. Also got my water today, so we're good on that. I won't die of thirst, which is always good. Investing.com, Nancy Pelosi makes significant trades in NVIDIA, Alphabet, Amazon, and Apple stocks. And hey, guess what? If she's buying it, she probably has reason to think the market is going to go up. What do you think? By virtue of their positions in Congress, they do kind of have insider information. And so, but they're still allowed to make trades like the rest of us are. From Fox Business, Walmart facing backlash over DEI policy reversal as shareholders and Dem officials urge them to reconsider. Well, perhaps the Dem officials should consider giving up some of their money in order to do what political strategy they want to have happen. So, how about instead of trying to check boxes, how about we hire the best people? That would seem to be the best thing for any company, right? Not trying to check boxes for any political agenda. Alrighty, let's get right into the questions. Market open back regularly tomorrow. Today was Martin Luther King Jr. Day. My man, fuzzy slippers. Okay. Paid for a car in cash. It feels great. I think I read this one. Been saving for a better part of 2 years for a car. A week ago, I found a 2013 Honda Civic. One owner, 30,000 miles, and a good maintenance record. The car is older, but with that mileage and a paper trail of the routine maintenance, I took a chance on it and paid in cash, okay? Just got it back from an independent mechanic who gave it a clean bill of health. And that's what you do before you buy it, for sure. After needing a few things tightened up, okay? Did it hurt writing that check? Hell yeah, it did, and that's the point. It should hurt. Yeah, I mean, you should be aware that you are spending your money for that for sure. But in 2013, even though it's a Honda, that's, most people would be wanting a brand new car. Let's see, but now that I got it looked at by the mechanic, overall came in under budget by about $1,500. Don't have any payments. Yep. And the cherry on top is something else that you don't have any payments. That's the cherry on top for me. Debt-free flair, and that's why you don't finance. So you can stay debt-free. Cool, cool, cool. From Plant OK, 2560 parents are struggling financially. I'm not sure what to do. Well, you can try to introduce them to the world of Ramsey, but you might be dealing with what Mr. Ramsey calls powdered butt syndrome, is where since your parents have changed your diapers, that means at no point in time, no matter how old they get, no matter how old you get, they do not want to hear from you about sex or money. So you could be running into that, but you can certainly model good financial behavior yourself. And of course, you can try to help them with it, like a budget and so forth, all the individual things with them. You certainly can do that. College, wanting to be a physician on full ride scholarship, fabulous, at an Ivy League school. Or do you not have to say school after that? You can just say at an Ivy League, and people know that you mean school. I don't know how the kids talk anymore, which is due to our income, okay? $10K per year. Yes, you read that correctly. I'm also an only child. Parents are not good with finances whatsoever. My mom was a stay-at-home mom. Okay, this would be A-A-S-A-H-M, stay-at-home mom. Maybe just hit the wrong key. When I was growing up, and my dad was completely on board at the time, but then he was resentful about it. Let's see. He owns a small construction business, but can hardly get anyone to work for him. Unfortunately, when I was in high school, my mom found out she had a blood clotting disorder. That's not good. Factor 5 and circulatory problems, which added to the thyroid problem she developed from the stress of her divorce prior to my dad. She also had to have a knee surgery, I'm guessing. Knee replacement because of exercising too hard. She's very overweight. Parents 60, mom and 54. This makes it impossible for her to work because she can't stand or sit for long periods of time, or else her legs will get dark and red. Right. Well, you got to find out what she can do. A receptionist job would be best. Yeah. So you would find out something that she can do. You don't concentrate so much on the things she can't do, but you concentrate on the things that she can do. The main problems that my dad has bipolar depression, undiagnosed. And see, handling money for most people is a problem regardless. And then when you throw these things on top of it, that just makes it even worse, even more difficult. He would go weeks without working and lay on the couch without getting up. Yeah, so that doesn't help at all. And guess what? You know how much you're going to be able to do about it? Almost probably nothing. Angry and narcissistic at times. Well, mostly all the time. Okay. He resents my mother for not getting a job, right? And he apparently never, and he doesn't resent himself for not getting out the couch, though, either, though. So, yeah, bipolar is a nutty thing. 3 months behind on rent, and they're threatening to take away his work insurance and car insurance. That's what they do when you don't pay it. Mom feels hopeless, and so do I. Love them both. Yeah, I don't know what you can do except talk to them both at the same time, and and find out if they want any help. You probably not working, or at least not that much. So you can't give them a ton of money to fix the situation. They have to get their butts to work, unfortunately. nobody saved and nobody, yeah, they're going to have to get their butts to work. So they either want to keep going like they're going, or they want to change things to make things better for themselves in retirement. I'm just worried they're going to end up homeless. I understand that they play a major role in this. They play it all. They didn't do any of it. I mean, they didn't. I mean, they're responsible for all of it. You know, your mom having medical issues, that's a different thing. Your dad's medical issue, that's a different thing as well. But at some point, they're also choosing to do what they're doing. At least in some portion. So, you know, they both may need counseling as well. And that costs money too, unfortunately. I know we'll have to start working to save for applications and getting a place of my own. Yep, but I have no car to get there. It's always something. Yeah, it is. And if you don't have a car yet and you're still living with them now, yeah, it's all over you. Yeah. So I feel like for me, for the past 5 years, my body has been in nothing but a state of panic. Yeah, well, I mean, if it's been that way for the past 5 years, what you do is you start engaging with it 5 years ago. So it didn't help to wait 5 years. They're in worse shape than now than they were then. And therefore, so are you. I wouldn't wish this on my worst enemy. Apologies for the long rant. Any words of wisdom would be greatly appreciated right now. Thank you. Just try to reason with them, and don't be surprised if they don't want to hear any of your crap because you're just their kid. They change their diapers, you know, and they don't have, you know, they may not have adult respect for you. No matter what, and you also may have made money mistakes. Who knows? But what would Dave do? You help them any way you can. And that may mean as much as, well, you have to work full time and you have to take some time off of school. That could be part of it as well. But it just depends on what they're willing to do. If they're not willing to do anything, you need to just let them fail and you take care of your life. So that's a part is up to you. But for me to do something like take time off of school, which puts my life in general and financial life on the back burner, and it makes it take longer to become a physician. For that, I'm going to need to see a lot of effort on their part. And if you don't see that, then they probably need counseling help anyway. They probably need other assistance before just general financial assistance. They need, with their lives, assistance as far as understanding the bipolarness of your dad, and even if there wasn't bipolar, there could still be resentment without that. So yeah, not fun at all. What up, Sid? How is life and stuff? What did it get up to? It is 11 degrees here in Columbus, OH. Hit the double digits. Fun times. Racer 422. What to do with a forgotten stock? Wife and I are on baby step 6 and have a 9-month-old. I found an old McDonald's had some stock. That my grandpa bought for us when we were born, and it's worth $15,000 now. Well, that's fun. That's like, that's where he forgot about it, and then he finds it, and then it's worth $15,000, and regardless of what she'd paid for it. And so that's the beauty of losing something like this, is that you keep it and let it grow. Of course, if you were trying to do the baby steps, it didn't say what baby step. Oh, baby step 6. Okay, so you could have used it on earlier baby steps, but it's fine. You found it now, and so you apply it to whatever now. So that's probably going to be to baby step 6, unless you are behind on your 15% of gross in retirement investing, which is step 4. Saving for kid college if you're behind on that, but if not, if you're doing 15% and you're up to date with what you want to have like per month for your kid college, if that even applies, then you would put it all in the house. Stupid about stocks and if I have to pay tax on cashing out. Yeah, you would have to pay capital gains tax on that. But my question is, should we cash that out to pay off $15K of our house? Yes. You would put it on whatever baby step you're on, and if you're already doing 15% in step 4 of gross income, and you're putting enough away for a kid college and don't need to catch up on that, then you would put all 15K on the mortgage. We only owe 19K on it currently, and so that would leave 4K. So how about you just pay it off all at the same time? You know, if you can. If not, if you got to take one more month to pay it completely off, then that's fine. But you would think maybe you could come up with that by the time you did the transfer and so forth and the cash and transferred it to your bank. By that time, maybe you could have the normal monthly house payment, which maybe $1,000 or $2,000, something like that. And so then it would only be another $2,000 that you would need to come up with to be able to do that. That would make us so close to being entirely debt free. Yeah. Like I said, you could probably, at that same time or within the next month, you could have that paid off completely for sure. So yeah, that's the fun way. Now it's not so fun if you forgot about it and you find it and you're still on step 2 that you've been on for years. It would have been better to find it before then. March Vet 2005, exhausted with the method. Well, so you see, nobody said it's going to be easy. And it's going to involve a lot of sacrifice to do this stuff. It's worth it once you get it done because that means you don't ever have to do that again. So let's see what Kristen says about that. I've been following Dave Ramsey since 2015. No credit cards, no debt, no car payment. The only thing I have are mortgage and monthly bills. I have a savings of $20,000 and manage my money. Took me a long time to get to this point, but, and then there's like 6 dots, 7 ellipses, I think. The last have a little agua. Last few years, this episode of the Ramsey Show Aftershow show brought to you by Crinkly Water Bottle. Last few years has really taken its toll, and I can never seem to get past this point. What does that mean? Savings $20,000, and you only have the mortgage and monthly bills. So expenses and mortgage, and you got the 20K of savings. Okay, so if you aren't making enough traction on the mortgage, then that means you got to lower expenses. So if your income's not going up, you can't just keep spending the same amount of money and expect there to be any result. Let's see. I realize that it's an actual great point to be in. Yep. Anybody in lower steps would trade places with you, I'm sure. Point to be in, I'm grateful to have learned and gotten mostly out of debt. Mostly. Do I have that? No, I recorded the mostly line from Aliens, but I didn't put it in my streaming system yet. I will have to remember to do that. But sometimes I want to just take one time and buy a large ticket. I just want to take one time, weird phrasing, and buy a large ticket item. Yes, it's emotionally buying. Yeah, emotional buying. Yeah. And that's, again, this is what we sacrifice on. Why don't you wait till you get the house paid off and then do that as a reward? How about that? And I'm diligently working on staying away from it, but I feel like, for me, everybody feels like something these days. I am in the boat now versus treading water and just sitting there. Something always pops up and takes it away, so I end up the next couple of months putting it back. It's never ending. Anyone else feel like this? Yeah, that does happen, but also people seem to not understand the meaning of the word need. Like, you need to do this, you need to buy that. And just because it pops up doesn't mean you need to do it. If you have something that needs to be fixed on the car, I mean, obviously you got to do that. If you have some kind of a medical thing, that needs to be taken care of, either from the emergency fund, which it sounds like you have, or just cash flowing it, that would need to be taken care of. But if something pops up that is optional, and so many things are optional that people don't think are optional, but yes, they are. So that just depends what those things are. And so that would be my challenge to this person, is to say no to some of those things that are optional, unless all of them every single time are not optional, which usually there's some optional, and they just think they can't say no to it, or don't want to, more likely. So yeah. So yeah, I mean, you're almost there. I mean, and it's up to you. You can be dumb if you want to and go back into water and tread water instead of being in the boat. Up to you. Most people will not take this advice because of the sacrifice needed. Thanks everybody watching. Currently live at the moment on this national championship day for college football. And of course Ohio State's playing for it, playing Notre Dame. And why they want to play football in that beautiful cathedral, I do not know, but they do want to anyway. But this one's in Atlanta. This game is in Atlanta, neutral site. Busy ad 5526, 19 years old. What are my next steps? Okay, so if you are a teenager or early 20s, young adult, if you're still in college before you get your big boy or big girl job, you're just piling up cash to buy cars and get out of college debt free. And that's a lot of people like to go ahead and, I want to open up a Roth IRA now. No, you don't. You might need money to move out, again, to graduate college debt free, to buy a car, or, over a couple years, maybe multiple cars. If they're beaters, who knows? And they should be beaters. There shouldn't be any new cars. But it's just to pile up cash. And then when you get your first big boy or big girl job, then that is when you would start doing the investing. And of course, you don't do any debt anywhere at that time. Hopefully you don't have any of that. And so you're just starting with the saving anyway, which is your 3 to 6 month emergency fund. If you can skip step 2 and you don't have to do step 1 separately, because you're basically just combining step 1 and 3. And so you're just starting there. So let's see what the dealio is. Looks like it's a long one, not too bad. I've always been focused on building long-term wealth as I grew up in foster care and never had a nickel to my name. Okay. Graduated high school and got straight into a sales job a year and a half ago. I had nothing to my name. Here's where I'm at. $85,000 income this year. Okay, great. Maybe there's no college. Maybe it's just gonna be in the workforce immediately. Projected to do 110 next year, 30K total saved. All right. $13,000 owed on car lease. Okay, company pays for 400 of my $500 car lease. If I hit my sales objective, 776 FICO score. All right, so let me Ramsey this for you. We don't care about the credit score. Don't give a crap about that. So that doesn't matter. You would not be taking out, why? I mean, if they're going to pay for most of the lease amount, why wouldn't they just give you a company car then? So if that's your car lease, then you're in step 2 and you would be doing that before doing any investing. So this person's probably not going to like the baby steps because it doesn't let him take advantage of the dumb way his company is going to do this. Currently live with a roommate. I pay $1,000 a month for rent. Moved out a year ago from my foster home. Okay, no problem with that. I'm unsure if I want to go to college still, right? Whether it be online or in person. I don't want to put myself in debt. You already did. You got a car lease. You're doing it wrong. Now, if this car lease is in the company name, that means they're responsible for it, and basically you are just putting in $100 a month for that if you meet your sales objective. I guess more if you don't meet your sales objective. But otherwise, if it's in your name, that's your debt, and so you're in debt in baby step 2. And so that you would focus on paying that off. And so you don't want to put yourself in debt. Guess what? You don't have to. And here's also where a lot of people will say, I needed to take out student loans. No, you could just work until you get enough money and apply for scholarships and grants until you get enough money to go to college. No, you don't have to take out loans. That is a choice. And I don't necessarily see the value with my current income. Okay, yeah, right. You don't have to go to college. Successful people, plenty of them, did not go to college. So, so you have that option, of course. And guess what? You can always go later in life if you want. I'm in school to get my real estate license and would long-term like to build an investment property portfolio. Okay, well, you're not going to do that by having car leases, my friend. I have no money in any investments and my goal is to buy a home. Okay, it's always everything. It's always everything. As soon as possible to be in my long-term real estate goals. Okay, you buying a house to live in is not part of your business real estate goals. That you don't bring that in. A lot of people like to do that and combine that with house hacking. Okay, I'll buy a house and I'll live in it, and then I'll rent out a room, and very TikTok-y advice. And so probably been on the gram as well. My girlfriend and I want to start a family in our mid-20s. Well, get married then, kids. And want to be in the best financial position possible. That would be not having the dumb car lease. Any advice to achieve goals would greatly appreciate it. I'm very proud of where I'm at, but want to take the next step. Well, the next step for you, assuming you have $30,000 saved, you would take that down to $1,000 and put that extra on the car lease if that's the only thing. Didn't it say no debt somewhere? Maybe that was the last one. That was the last one, I think, said no debt. Because that would not be correct. So, but yeah, figure out about the car lease, get that taken care of. And then if that's taken care of, then you do baby step 3, and only then would you start investing. But you got a while before you would have to have the car lease completely paid off, and then you don't get in another lease, then you just Either you buy out that one and keep that one, or you buy a used car because you're not a millionaire yet. And then you can hold off on investing. But see, you want to do that too. Everybody wants to do everything all at the same time. You want to get a house and start your business with your investment property portfolio. You cannot do everything all at the same time because the money is limited. So it doesn't sound like you have many expenses. So you can put all of that money towards paying off that car loan and then making sure that you do have 6 months of expenses, and then you can start saving out for a house. And I would get the house and just be content with your $110,000 a year, if it's what it is projected, if that actually happens. See, that's the problem with projections. Sometimes they don't happen. So yeah, so you can do that. I would do the house first and forget about investment property portfolio until you are in the house. And then hopefully you begin making more money or think of other ways to make extra money so that you can save up to buy a property in cash. No mortgages for investment real estate. That's a no. A no. As Tango said in the Ramsey Show chat today. How do you spell it? N-A-U-R. Naur. Yeah, naur. That is kind of how they say it. Aussies. I don't know why you would change the no and then like add 2 other sounds to it. Instead of just no, it's naur. Don't get it. Anyway, it's fun times. Obviously, I like saying it. Or I wouldn't say it. Pickle Slow, 4862. Credit consolidation. And that's going to be a nair as well. Had over $30,000 on 2 credit cards and decided to use a debt consolidation company back in April 2024. I hope they did not screw this person over. Let's see. They estimated cutting the debt in half with a 5% interest rate. Yeah, I'm sure they did. They recently settled 1 card, which only saved me about $800. Yeah, see, and you could do that yourself instead of paying them thousands of dollars to do that for you. That is the problem. That's why it's con. That's why debt calls it debt. That's why Dave, not debt, he's the opposite of debt. That's why Dave calls it consolidation, because it's a con. They said they're still negotiating the second card, which they may or may not be doing yet. They may be just letting it sit. The longer they let it sit, the lower they can settle it for. And most of the time, the money that you've already been paying them, see what they do most of the time is they get you to send them your minimum payments. And then they just let your debt go into collections. And guess what? You don't need them to not pay it and let it go into collections. You could do that and then negotiate to settle it in full for a lower amount later, just like they can, except then you would have thousands of dollars extra that you did not pay them. I'm wondering if I should just try to settle with the credit card company directly, which Ramsey said can be done. Exactly, it can. That's why you don't do that. You should sever ties with the consolidation company first, though, so that they don't try to do something after you have settled it. And hopefully pay less than what you don't need the word what there, less than the consolidation company. I don't know why people started doing that. The first time I heard somebody do that was on a football telecast, and former Dallas Cowboy quarterback Troy Aikman said then what it was before. You don't need to do that. It's less than what it is. You don't need to put the what in there. Less than the consolidation company are most likely going to settle for, and instead of less than what you don't have to, the word what is not necessary there. Anyway, so far. Anyone have any experiences with this? Not personally, but there's a bunch of calls on the Ramsey show about this exact thing, and you could just do this dumb crap yourself, not paying it, and letting it go into collections, and then you settle later. Also, what they don't tell you is that destroys your credit if you care about your dumb credit as well, and they don't tell you that ahead of time. And you probably don't read any of the paperwork you sign. Most people don't, and so they probably tell you everything that they're going to do right in the paperwork, but you got to read it in order to find out. Oh, let's see what it's got to say about life and stuff. Wonder if the big dealerships have some kind of arrangement to make the payment seem lower for their employees. Oh, could be. She's talking about the car lease, I think. Maybe payroll deduction or giving them better, quote unquote, terms or something would help you explain why they're so out of touch. I'm out of touch time. Out of my head when you're not around. That's what it is. Oh, oh, oh. Oh, oh, oh. All the notes there. Out of touch with what's affordable for the average person. Yeah, that could be it as well. For sure. And what we know of, and of this there can be no doubt, people are nutty. Funny CT girl, Connecticut girl, maybe? Does Dave offer any advice on negotiating price on a car purchase? He has talked about that briefly, I think, before, but it would just be like, I mean, back in the old days, I mean, I remember him saying, yeah, you take cash there with you, and you say, I have this cash, but it doesn't really work that way anymore because they figured out they make more from the financing than they do from on the actual car purchase itself. And so they figured it out now, so it doesn't work like that anymore. Sebastian Maniscalco, comedian, has a bit about that where his dad, goes anywhere to a car place or whatever, no matter what he's buying, and he's like, they tell him the price, and he says, well, I've got cash. What's the cash price? And of course, nowadays it's not really any different, but it used to be back in the day that you could do that. Because back in the day, they also, some of them hadn't figured out, well, we can just pass this credit card fee onto the customer. They didn't figure out that either, or the whatever loan paperwork fee, all that stuff. We can just pass that on to the customer instead of taking that on ourselves. But so it's not quite like that today. But I mean, you can set whatever price you want to pay and you just walk. You can take the cash and you can tell them, okay, here's what I'll pay for that. And if they say 1 penny more, you can say, okay, thank you, sir or madam, and you can just walkity-walkie out of there. So, let's see, I've never seen anything about this in all the videos I've seen. Yeah, it's been a while, because like I said, it's not really a thing anymore. I mean, you can negotiate you can negotiate on it. The last time was when my ex-wife got a car. And we weren't even married at the time yet. I was still just her boyfriend at that time. And she was going to get that. And there was a charge on there for, it was something like $3,000 extra for the striping on the car. And she said, okay, don't have the striping on there. And the salesman said, okay, I'll be honest with you, it is a way to make money. And I'm like, okay. And so she did not buy that one. Let's see, I've never seen anything about it and all the videos of saying, I understand the goal is to pay in cash, right? But are there any price negotiation tips that anyone is aware of? And these days, they will agree to a price, but then when you say you're paying cash, then they'll say it's going to be more money than that because they're losing money because you're not financing it. So most of the time, they will be adding that up. Baby step 7. So, that's perfectly what you do. And unless you're a millionaire, it should be a used car. And if it's a used car, you could buy it private sale and get a better deal because the dealership do take a bite. So for your amount of money, you can get more car if you buy it private sale. Okay, Nefarious Nest 6807. New to using every dollar system. Me too. Let's see if it's something general here. We just started using every dollar. My husband and I transfer half of our total monthly bill amount into a separate bill checking account every payday. Where does the other half go? Each payday, we transfer $3,000 into that account. And that seems to be the number that covers everything to be able to come out on auto pay and leave a bit of a buffer. All right, so you should still know like what things that covers and stuff, and that would be in every dollar. In your every dollar budget, you would be able to see that amount. For instance, we get paid this Friday and have a balance in our bill account, of course. That money is already claimed for upcoming bills, right? But how would I track that amount in the app? Would it be considered income? Yeah. Trying to figure out the best way to set this up. Thanks. Okay, yeah, I don't remember from that, but the way you're trying to do it and the way you're thinking about it isn't really the way it works, I don't think, in every dollar. Basically what you do, you're trying to have that be a different thing than just your income minus all the different line items that are outgoes. So I don't know. You got anything on that, Sid? As far as how that works, she used every dollar much longer than I have. So yeah. So I don't know, but they don't have this thing that you're trying to do. And a lot of people do stuff like this, and it's fine. You can do anything like this. Have as many different accounts as you need, as long as it doesn't, as long as it helps you stay on budget. So, but if it's just so you can get it paid, and what you didn't say is where's the other money going, and so what you're doing with the other money may also be a problem. Because all of that other money should be going to whatever baby step you're on. Like, for example, if you're on baby step 2, all of the other than the expenses and what you need to get to the next paycheck, every other cent should be going to the debt, whatever baby step you're on. Does anyone know about the follow-up podcast? I heard somebody mention a new podcast that follows up on callers. Anyone know what it's called or where to find it? Yeah, it's on, I think it's, no, I don't know. I don't know which one it is. If it's on the highlights channel, it's on one of the Ramsey channels. It's called 90 Day Money Makeover. 90 Day Money Makeover is the name of it. And I think there was only been 2. I don't know if another one came out today or not. I think they have been coming out on Mondays. But there's been 2, and Jade is on all of them, and she teams up usually with another Ramsey personality. On the first one, it was John, and it was Rachel on the second one. And yeah, they just take somebody that has called. The first one, I don't remember the call, so I can't say for sure that it's a call that would be taken on the show. It could be somebody that called and left a voicemail and they called back and set it all up. Or I just forgot the call. But the second one, I did remember the call coming in. So it was an actual call on the show. And in both of those first two, the people had houses that they could sell. Because they did both have a lot of debt, and selling the house basically got them completely out of debt. So it'd be interesting to see one where they don't have a house to sell, or it doesn't make that much sense to sell the house, and so they don't, and they keep the house, and then they have to cut other things, etc. So that will be interesting to see. But yeah, not bad at all. People have been asking for follow-ups in the Ramsey Show chat for years and years and years, and so now they're finally doing it. Cool. Pappers 101, need help buying a car. How do I provide proof of income if I am a live-in caregiver and on a fixed income of $1,000 per month? You could show bank statements of the deposits. I get paid through Zelle, and my credit score is 750. I have about $6,000 saved up. Proof of income. So you see, I don't think they need proof of income if you are buying a car in cash. And if you're not buying the car in cash, you're doing it wrong. I don't know if you've heard of Mr. Ramsey before. You're on the Dave Ramsey subreddit here. And so if you haven't heard of Mr. Ramsey before, he is the no debt guy. So that would be a no on leasing or financing a car. That would be a no. So no down payment on it. No. Okay. Totally in cash. So that means you're probably buying a beater instead of a newer car. Sorry about that. And based on that alone, that's too much to sacrifice for some people, and so they will not follow Dave's advice. Let's see. Sid says would help. You explain why they're sought it. What's for? He's doing paycheck with planning within the app, but they don't care about the current balance. Could add an income for last payday and divide that into different sinking funds for each bill, but that's a bit much of a hassle for me too. I think the whole idea of budgeting paycheck to paycheck is silly unless you also pay your bills on a paycheck to paycheck cycle. Easy to do month to month. Okay, yeah, I didn't even catch that was what was happening there. It said totally monthly bill amount. Boom, boom, boom. Each payday we transfer. Okay. $3,000. So that would be at least $6,000 every month. So yeah, it would. Yeah, definitely do it on a month schedule. Yeah, I didn't even think about that difference. Thanks, Sid. Renting a vehicle without a credit card can be done. Good feature 8213. We tried to rent a vehicle from 2 different places today, and both say you now have to have an actual credit card. They will no longer accept debit cards to rent their vehicles. Has Dave Ramsey spoken on how to handle something like this? We don't have a credit card and are at a loss of what to do. You can put down a cash deposit. Sometimes they will take your debit card and put a hold on a certain amount. And sometimes some of them probably won't work with you. So you have to find somebody that'll work with you on that and see what they want you to do. Another thing you can do is get a Visa gift card and put whatever amount they need to be on it for you to do that. And so ask them how you can still rent with them without getting a credit card. Find out what, and you can give them those options as well. So you can do it. It just takes a little more work. And it's worth it not to have a credit card. Popular ad 2193. Do you guys use your emergency funds to buy a car or have a separate account? Okay, so unless it's so you see, Let me read the question first this time before answering ahead of time. I never really hear Dave talk about this. You're not listening much then. We live in the Rust Belt, so even a $5,000 used car will most likely be rusted out with 5 or 6 years if it's not already. I don't need a car yet, but both of our cars are over 20 years old. And I could see one of them needing to be replaced. Little Rust Belt grammar there. In a few years. Yeah, in a few years. Just wondering if I should have a separate account for a planned car replacement or use the emergency fund and replenish it after a used car purchase. I don't ever plan on getting into car payments again. Well, you just don't do it then. You don't have to say, well, I'm not planning on it. No, you just don't do it. You don't make it an option. And can do almost any repairs myself. Great. So I'm fine with driving beater. It's great. So, if this is just general, it'll probably need to be replaced in 2 or 3 years. That's not good enough. It has to be like a 51% chance that it'll need that to be happening, and then you would only save enough to buy a new beater. So that's not going to be enough. That's not going to be that much. So you can do that, but otherwise, in the meantime, until that seems like it's more likely to happen, like since you know how to work on cars, you also know how to get under it and look at it and see how rusted it is now. And so if it doesn't look like it's going to be a problem, then there's no need to save money for it. And then you can pay off your dumb debt instead of being worried about replacing a car too early. So the person it's a car person, should know already. To pay off the mortgage, $538K at 3% with another 27 years left. Or hold my shares in the stock market with the YOLO stock pick I've been holding for years. Well, what do you think? What do you think? It depends if it's in a retirement account, you would not touch it. As far as taking money out of it, Dave would have you sell the single stock and put it in managed mutual funds if it's retirement. Otherwise, if it's just in a brokerage account, yeah, you would sell that and put more on the mortgage. So you do not debt leverage your house in order to have shares in a YOLO stock pick you've been holding for 4 years. So you would not do that. I'm not even going to read it because it doesn't matter. He could type anything in that spot and it would not change the advice. That was a weird way to drink that. I realized it as it was happening, and I thought, I don't know why I'm doing it this way. George's Mash. Jorgs Mash. Jorg Smash, maybe. Like Hulk Smash. Question for baby step 4. Answer for baby step 4. It comes after baby step 3 and 3B too, if necessary. I just set up Roth IRA in December and sold some stocks in a taxable account to fully fund the Roth IRA to the limit for 2024 and 2025. Okay, so you're all done, but you need to be investing 15% of your gross income over the entire year. I'm currently contributing 8% of my gross paycheck into my company's 401k. Take full advantage of their match. Should I change my contribution to 15% even after fully funding the Roth IRA for the year 2025? If I leave it at 8% when 2026 rolls around, I would put the remaining 7% into the Roth IRA. If I change it to 15% now, I would have to switch my 401k back from 15 to 8 at the start of 2026. No, you don't have to. Because you don't have to front load it. You should be putting money in with every paycheck. Do your 15 with every paycheck. Now you can't put any money into Roth until next January, so all of the 15% would be going. So any match that they do that doesn't count as part of the 15%. Dave wants you to put 15% in. So you're done with Roth, and so you just need to get to 15% of gross income for the year total, including in the Roth and the 401k. And of course you maxed out last year because you did it in December, and so that was a good time to do that. Generally, when you start step 4, generally it's going forward there, and you're not, you don't have any, like for example, the stocks that you had in a taxable account, those should have been sold already to do steps 1, 2, and 3 faster. If there was any, if there wasn't any debt, then you wouldn't have had to do that, but they would have been sold to have the full emergency fund first. So that should have already been done, but since it wasn't, you wanted to do catch up on 2024 and max it out. And that's fine, but the idea is that you're doing it out of every paycheck and not trying to. I see what you're doing, and you're trying to front load the Roth, and that's exactly what you should do. You should max out the Roth account, any Roth accounts, before doing any non-Roth accounts. Match first, actually, and then any Roth accounts, and then you would go to the conventional 401k after that. So yeah, a lot of people try to do that as far as lump sum, and it's fine if you're on baby step 3. Like for example, this person, if he was on step 3 until December, which he shouldn't have been because he should have sold the stocks to take care of baby step 3, but he didn't do that, and so when you start the Ramsey baby steps, you just start where you are. So in December, he decided to do stuff right, hopefully follow the baby steps, and so got through step 3, and then realized he did it wrong and had the stocks so that he could sell them, and so he sold them and threw them in through the max amount for the Roth IRA for 2024, and did for 2025 as well. And so again, that's not necessarily the idea. So if you were like what you should have done, those stocks would have already been gone, and they would have been part either of debt payout or part of emergency fund, or maybe you would add some left over, but only then would you have been starting to invest. And you could do that, of course, with anything left over from the stocks if you had used them in steps 2 and 3 like you should have. If there was any left over, you could use it for that. But otherwise, it's just starting with 15%. Like the average, if you had done it right, and say the selling the stocks took all of your money, and between steps 2 and 3, that took all of your stocks money out of the taxable account. And so then you didn't have anything extra. You have your full emergency fund, but nothing extra to invest. Then you would just be investing out of your paycheck. And then the first amount would be going to, in 2024, the first 15% of that would be going to, in that Roth account. And you wouldn't put any in the 401k. And then in January, you could do the Roth. Yeah, I guess you would do that anyway. You would do the 401k, excuse me, to get that match. You would do that in December, even just because it's just that month. Yeah, sorry about that. Didn't mean to be confusing. El Diablo 1641. How much is too much to put away towards 401k? Nothing. Not too much The only way it would be too much if, say, you have debt to pay, you don't have full emergency fund yet, then you're doing it wrong. You shouldn't be putting any towards retirement in those cases. Also, even if you are on steps 4, 5, and 6, you would not invest more than 15% of gross while you still have a mortgage. Once you get on step 7, you can invest as much as you want, but even then, you do want to keep enough liquid so that you can do fun stuff with it, so that you have money to buy a replacement car or something like that. Anything like that that you want to do that's going to cost money, and you don't want it locked in behind a retirement account. Because if you need to take it out of there, that's not only the in the 401k, not only taxes on the growth, that's also penalties. And so that's too much money to be given up. So you don't want to put it in there if you might need to spend it on something. Looking for some guidance on if I'm over leveraged here or not with my 401k contributions. Okay, hit me with it. Currently today, I'm 27 years old and I'm investing 17% of my salary to my Roth 401k. Yeah, you would kick that back down to 15%. And anything extra would be going on the house if there is a house. If you are on step 4 and no kids and no house, congratulations, you're on step 7. And you can invest whatever you want. Now, if you're thinking about buying a house eventually, you may want to start saving that down payment now. Employer gives me 6% match, okay, up to 100%. So total up to 100%. So you don't need to say, if it's up to 100%, you don't need to say up to 100%. You would only need to say up to a certain percentage if it was less than 100. So total contribution is $19,500. So that doesn't matter. What matters for the Ramsey steps is you're doing 15% of gross out of your pocket. The 6% match is gravy on the biscuit. That's great. Congratulations. That's just going to be extra. Outside of that, I make a decent amount of commish in my sales role, roughly close to my salary or exceeding it, which usually helps me max out my 401k contribution limit for the year of $23,000. You can also start a Roth IRA if you need to, if you fill it up, if you max it out and you still have money left to contribute for the year. You can put the maximum, in the Roth IRA as well. Also, I have no outstanding debt at all in my life. Great. Does that mean no debt at all? What's this outstanding thing you have here? At a 17% contribution rate, I can live just fine, but that high of a limit makes it a little challenging to save up for a condo, which is something I'm pursuing financially. Yeah, so you can even take it down to 0. The balance between step 3B, which is the down payment, and step 4, investing for retirement, you can pick that as you want, including not investing at all for up to 2 years. After 2 years, Dave wants you investing again. But that way, and some people have to do this when they insist on living in a high cost of living area and don't make high cost of living salary. Let's see, where was this? So for a condo, which is something I'm pursuing financially. I also like to invest in the market on the side with any cash I have left over. That's a no. That's a no for that. And so again, we have the time where everybody wants to do everything all at the same time, and that's a no. Do not do that. I'm going to get a condo. You're saving a down payment for the condo, and you do that first before doing any of your other little crap. Stop. Everybody wants to do that. Currently, right now, my spending category is not including my commission. I only factor my salary for living expenses. That's great. And then that way you can save up all of your commission for the down payment. And then when you're in step 7, all your commission can go to extra investing. That's fine. But you wouldn't be doing extra investing beyond the 15% of gross until that condo is completely paid off. Needs 38.19%, wants 14.92%, savings 49.90% of your. So you should not be saving half of your money. I mean, unless that's for the down payment. So, but there shouldn't be like general savings that's happening at a almost 50% clip. That's not how you do it. And also how you save more down payment faster is you cut that want percentage down. I mean, the wants can stay there as wants. You don't have to satisfy those wants. For those with more experience in life than me, am I over leveraged with my Roth contributions that I should maybe be putting elsewhere, like saving for a home versus wasting money away by renting? Many thanks in advance. Mr. Ramsey is not the you're wasting money by renting type of financial advisor. Sometimes it's a good idea to rent. But for you, it seems like you'll be able to get a condo relatively quickly. So, yeah, what I would do is just save it. At a minimum, what you do is you follow the baby steps, and that means you cut it down to 15% of your salary invested. And that's overall. That's in Roth 401k, and if you have to open up a Roth IRA in order to complete it, since if you make a little bit too much money to do 15, you'll hit the max on the Roth 401k, and so then you would throw the rest in a Roth IRA to satisfy that 15% a year. And so, where you came up with the 17%, I don't know. But again, people are nutty, don't know. So yeah, kick that down to 15%. But as I said, if you want a condo even faster, you can cut that down to 0 while you apply that money to the down payment. And then once you get a down payment and you buy the condo and you have that mortgage, you can go back to doing 15%. And then, but you wouldn't do more than 15% at that time until the condo was completely paid off. And then after you don't have a mortgage anymore and you're on step 7, then you can invest whatever amount you would like to. It is approved. New credit score. Yeah, you can foresee the expense. It's not an emergency. She thinks the diagram will be helpful when explaining the retirement account earlier. LOL. A diagram. I can see a list. I mean, even a list with a graphic or something like that. But diagram, I don't know. Draw it, Sid, and I'll show it. Better yet, draw it, and you can present it yourself when you co-host with me eventually. I'll wear you down eventually. Also, it's annual limit. Read too much to 401k. Right, IRS annual limit. Right. And so if you hit the limit on that, as I was saying, to the Roth 401k, then you could still, if you had money out of the 15% gross to still be investing in something, you would just open a Roth IRA. You could do that unless you make too much money for that, and then you would do a backdoor Roth. We have answers. We have answers for this stuff. No credit score, mortgage options. That would be called manual underwriting. And Minnie from the Ramsey Show chat tells us that they don't do manual underwriting in Canada. So we'll take her word for that. So you're on your own for Canada, eh? Plus it's very cold there. Way colder than 11 degrees Fahrenheit. In most places, a couple places there that might be warmer. Hello. Hi, guys. Everyone. I have been living the Dave Ramsey way for some time now with no credit cards, but I think it's starting to show some cracks with my pursuit of buying a home. I spoke with Churchill about beginning the manual underwriting process. Effectively, I'm stuck till I complete a year of rent, which will be done at the end of April. Okay? And then there shouldn't be any problem. Then what's the problem? The gentleman I spoke to mentioned a higher interest rate initially, which I expected. He mentioned you can refinance later if the interest rates come down, right? This being said, with having a mortgage, I will have a credit score, and the score will be relatively crappy if I decide to refinance, which will hinder that process. I think on refinances that's manual underwriting as well for that. I'm talking with the idea of getting a credit card. No, that would be dumb as crap to do. With a 4.5 months to go before my lease is up. But that seems a little too fast too to try to fix your credit score in 4.5 months. I think that's going to be a nair. I don't think it would work fast enough, and it wouldn't be. It's not gonna. Credit card is not going to be advised for any reason. Even this, a lot of people like to come, like they call the show, they send in emails, and people still, they say, I've listened to you for 30 years. Should I take a loan to, and it doesn't matter what the reason is, the answer is always no. Be the right move? No. To increase my position, getting a better loan? No. We're trying to do a thing called not have any risk, not have any debt, not playing the credit card company game. You don't do that, even if it means having a slightly higher interest rate. It's fine because you're not putting any money on paying any money on credit cards. Because you're not buying dumb crap that you would buy if you had credit cards. I'm not sure if that is enough time. I don't think it would be to really do anything credit-wise. Right? Should I pursue the manual underwriting with a small credit union? I would let Churchill keep working with you because they are a broker. They will find you the cheapest loan. I've heard some good results from some people on here about those. You can try. It wouldn't hurt. And yes, I should have thought of this a few months ago or years ago, but I was confident in the Dave Ramsey way. Any help is appreciated. I would recommend that you stay confident in the Dave Ramsey way, and you do manual underwriting for that, and you do not think about getting a dumb credit card for your freaking credit score. It's not needed. It's not going to keep you from getting this house or refinancing. Jen's small family. Going through life thinking about 1 or 2 points. It probably wouldn't even be 2 points higher. Interest rate for you, but the problem is because you have such a short history of renting, you may have to wait a while. And so also if you had 2 years of rent history, that might help as well. So it's not Dave's fault that you didn't start renting until 8 months ago. So that's not, or however many months ago, that's not his fault that you don't already have 2 years of rent and other utility payments and stuff like that. That's not his fault. Car advice. I need to get a bigger car for my kids, but I need it to be reliable too. So I can stay debt free. What's the most reliable cars that you guys have seen for under $4,500? I'm a delivery driver, so it needs to be reliable. People like Hondas and Toyotas a great deal. So, but I need to get a bigger car. I need it to be reliable. Justification station for trying to get a new car. Now, why does it have to be a bigger car? If you have yourself and 2 children, guess what? They can fit in a compact car. Even 3 children and a compact car can fit. So this I need thing, and that's what a lot of parents do, especially new parents. They get one child, and then they think they need to buy a minivan for the kids, some of which aren't even here yet. So that's a nair on that. So, but people, I'm not a car guy, so, but generally Hondas and Toyotas seem to be the most reliable, at least on hearsay. That is an ad. Almost fooled me. Almost fooled me. Golf ball whacker 3, trying to decide how to save for kids' college. All right, let's see. Have a 6 and a 5-year-old. Have $10,000 set aside for each kid. Start saving for the future. We also then plan to put away $200 per month for each of them going forward. For the initial $10K, should we put in $529 and then leave it there? I don't want to overfund the $529, as I think college may look different in 12 years when they get to that point. Finance guy is trying to get us to open a whole life policy. So you know why he's trying to get you to do that for each kid? So that finance guy can make some finance money. But I'm not big on the front-loaded costs for these types of accounts. And if you know anything about Dave Ramsey, he would say no to whole life in general. Ever. Ever. The only exception would be if you can't get term life or any other kind of life insurance at all. If that's the only life insurance that you can get and you have people dependent, which you do, you have kids, maybe a spouse as well, and so you would have to get life insurance. And so if whole life's the only thing you can get, you would get that. But yeah, finance guy is trying to make some money. Maybe that shouldn't be your finance guy, dog. Before you start to see a return on your investment, right? It's not the only investment should be the payout amount. That should be the only investment. Because they're not good investments. It's not good returns. You can do much better if you get the cheaper term life and you invest the difference in price on your own. You can do much better. And then plus, then they pay the death benefit and your heirs get to have the investment. In whole life, they pay out the death benefit, but they keep the investment. That doesn't sound too good to me. It's crap. Financial guy knows it's crap. Unless he's deluding himself. Would it be better to just invest the extra each month into my company's stock program, which I can purchase 15% discount yearly? No single stocks for Mr. Ramsey. So you can just invest that amount of money. You can add that amount of money to $529 if you'd like. You can check out the differences between $529 and the ESA to see which is best for you. 529s are state dependent, so different rules in different states. Educational savings account, ESA, is a national thing. So just because it's a 15% discount doesn't mean that it's a good investment, sir. My last 80. What time is it? Need some motivation to pay off this debt. I see some dots. Let's see what else is on there. Not that much stuff. It's just longer because it's a nice bullet point list there. Maybe step 2, Flair, 27 years old, 13K in debt, 20K in retirement. Stop investing in retirement and pay off the debt. 6K in a taxable account. Sell the stocks that are in there or mutual funds, whatever's in the taxable account, you sell that. And then you put whatever's left after the taxes, you put that to the debt as well. The retirement, you do not take money out of there to do that. 2K in a savings. I see this all the time. I don't know why why the kids add an extra word when they don't need to do that. Like they add that what in there, or another word, and then they just leave out a word. It's in a savings account would be the word that comes after that. Just like you didn't say 6K in a taxable, did you? No, you didn't. But why do you say 2K in a savings? Now, it could be 2K in savings if you didn't have the A there. But, you know, it's the English language, kids. Learn it, know it, live it. Should only be $1,000 while you have debt. So that would further take down your debt. 120K salary annual, so 10K monthly salary. But after 6% 401K deductions and taxes around 7K. So again, you stop contributing to retirement. Yes, you forego any match and the time in investing. You do not do that while you have consumer debt. You pay that off first, and then you get your full emergency fund as well before you start investing. You're doing it wrong. In baby step 2, then why are you doing baby step 4? Why are you doing that? You're doing it wrong. Anyway, I'm already putting 1K per month towards my debt, but I can put 3K if I pause my retirement and no longer add to my savings for now. Hey, guess what? It's like you're coming up with it on your own. It's like you're just thinking about it and say, you know, yeah, I'm doing this stuff, but I could, if I did this stuff, I could do it this way. And the I could do it this way is actually following the baby steps. So, of course, that would be the advice. I, for some reason, cannot get myself to do that. Well, that's because you're dumb. Mr. Ramsey's way of doing it has been proven millions of times. Your little way of doing it has not been. So, that's all I can tell you on that. I would just love some motivation. His plan has been proven, yours is not. So it's up to you. You can keep doing what you want to. It's going to take you longer to do it your way, my friend. And, I mean, most of the baby steps aren't that pleasant to do. So it's fun to get through them the faster you can, especially the lower ones. And so if you do it Dave's way, it gets done faster. So your money and your life, of course, it is completely up to you. And hey, I don't mind if I'm friends with people that do not take Ramsey's advice. So I can still be friends. We can disagree on the best way to do it. That's fine. But I know I'm right about it. I know I'm right that it'll take them longer to get to the same spot. Even the ones that care about getting to a better financial spot, some people don't even care about that. Or they say they do, but their actions do not support that. But I can be friends with them anyway. Paying off car loan. Hello, everyone. Hi, guys. As the title references, I am interested in paying off my car loan. It was a very dumb decision I made in 2022 before I was married, and I let family members influence my decision. Yeah, they don't get a vote. Unless they're paying for the car, they don't get a vote. It's 100% my fault. That's true. Good job. Way to take ownership. That's on me. That's on me. That's the way the football players do it. Like if they fumble or something like that, and you know the guy will be like, "That's on me. That's on me." Got fumbles, then the defense has to go in, and then the other team gets a field goal or a touchdown or something like that, and then the defense comes back. And then the guy that fumbled is like on the sideline as they come back, walk past him. He said, "That's on me. That's on me. That's my bad. That's my bad." Yeah, we know. It was on TV. We know whose fault it was. So, and then hopefully sometimes the person that it's their bad, sometimes they can do thing that sounds fun, doesn't it? Sometimes when somebody does something like that and fumbles, then later they can make a play and maybe they can score a touchdown and they can get those points back. Let's see. 100% my fault and something I regretted even before I pulled out of the lot. Yeah, so you should have thought about it 2 more seconds and not done it. And realize that the family members being influenced into the decision. I mean, especially if you're an adult, a lot of times family members need to shut up. They just need to shut up saying to get a loan like it's a good idea. That is ridiculous. I mean, I can understand if you're doing something bad and harmful to yourself, and but they may also have in their heads that it is harmful for you if you don't get a car loan. And they're just brainwashed in the same crap my dad used to tell me all the time. You're always gonna have a car payment. You're always gonna be in debt. Wrong, Dad. With that being said, I've been following Dave for the last 6 months, and even though I did a few things that he directly advises against, we all have. It's fine. Just fix it now, like you're doing. I'm ready to start my debt-free and investing journey. Okay, so you do that one after you do the debt-free one. Baby steps in order, not all at the same time. I'm a man, 27, married with a 1-year-old. Auto loan terms, doesn't matter. You pay it off. I got a great idea. $50,000, 72 months, pay balance $25,000. So you paid half of it already? Plus the interest? How long ago with that? 2022. Okay. All right, 2 years. I mean, that's pretty good. I mean, you are paying extra on it. But the quickest way out of it would be to sell it. Payment $750, but I normally pay an additional $250 per month to make it even $1,000. Household net income $100,000, varies. 100% commission job. Monthly expenses $6,500. Roth IRA. So you would not be investing while you do that. You would not be. Oh, that's how much is in the brokerage account. You would not be. Oh, if that's what you're putting monthly into there, that's a nair. You pay off your debt first and have your full emergency fund first before doing that. That's a nair. $70,000 in the emergency fund. So you're doing it wrong. So in the past 6 months following Dave, you haven't been exposed to it enough to know that you're doing it wrong. You're doing it wrong. Yeah, you would not have $70,000 emergency fund and also have a $25,000 car loan. That's a nair. Monthly expenses should be at the most $6,500 a month. But as we all know, stop making excuses for yourself. That is not the case, and additional costs always come up. Yeah, they can if you let them. Some things, obviously, you have to pay, you have to do, especially if it's an emergency, but that's what your emergency fund is for, and it shouldn't be $70,000 while you still have debt. That's a nair. But yeah, people, especially people that make more money, tend to do that stuff where this additional thing came up, this came up, this came up, this came up. Especially if you have kids. Didn't it say kids? Oh no, 1-year-old? 1-year-old. Okay, so kids probably not trying to spend a lot of money, not at one. Probably you trying to spend a lot of money on the kid. And something that comes up as part of expenses, if it's something that you think that will be cute for the child, but the child doesn't need, that's on you. That's your dumb butt spending that money. This figures include mortgage, utilities, food, car, loan, insurance, eating out. There shouldn't be any eating out either while you have non-mortgage debt. That's a no. You're doing everything wrong, lady. Or, yeah, little lady. Yeah, no, it's a man. He said he was a man. Pretty much everything that I can think of that we spend money on per month, okay? Okay, so eating out, no. Shopping, no. People do be shopping. Do not be shopping. Be grocery shopping for your food and not eating out. But you don't go out to shop just to spend money on stuff. That is dumb as crap, especially if you're on step 2. That is so dumb. Let's go out and purposely look for stuff we can spend money on. Dumb as crap. For 6-month emergency fund purposes, I can get this down to about $5,000 of a pay my car loan and remove everything from my budget that is not a necessity. Okay, that's great, but your current emergency fund is too much. You just pay that off immediately, and then you still have freaking what is that, 25? Let me do the math on that. $45,000. What you talking about, Willis? Yeah, 45. You would have $45,000 in there. Is that what your emergency fund needs to be for 6 months of expenses? 66 times 6, that would be 36. Yeah, so it doesn't even need to be 45 in there. 45 is even too much. So yeah, you would pay that car off today. When was this written? 6 days ago. Yeah, you would have paid it off 6 days ago. If I had been able to tell you that, and you followed my smart advice, which is Dave's advice, remove everything from my budget that is not a necessity. Well, I mean, just by liquidating the emergency fund to pay that off, you can already be back in step 4, and so you really wouldn't have to, unless you wanted to get through with the other baby steps faster by still cutting your budget. And the problem with people is this kind of stuff doesn't occur to people. And of course, it didn't occur to me either when I was this dumb either. So I get it. But I also wasn't trying to send messages to anybody about this and posting it online and saying, yeah, I have debt, but I also have $70,000 emergency fund. In what world do you think that would make sense? I don't get it at all. And so also the brokerage, you can cancel that out. You can close that out. And so that leaves more for savings. I even forgot about that part. My question is, should I drain 35% of the emergency fund to pay off the car? Yeah, see, you know the darn answer. That's what's so frustrating about this stuff. That's so frustrating. I mean, at times like this, I sort of get Caleb Hammer being so anxious about what the people are doing. He like takes it on more himself, I think. He like feels like he has the debt. It's like, oh gosh, you know. I just think, how can you be so dumb, basically? And I was too, but I also wasn't asking exactly. My question is, should I do the exact thing that Dave would say you should do? Yes, you should. Which is drain $35,000 to pay off a car loan, or just keeping making the extra payments until I pay it off. What do you think? Do you really think that the advice would be to just string out the clock, just run out the clock on the car loan and make sure you give them all of the interest, all the extra interest, make sure you give that to them, and keep the extra money in the emergency fund? Do you possibly think that would be the advice? That is the dumbest crap I've ever heard of in my life. I can understand you not thinking about it, and you just doing, la 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 la, going about your way, and somehow having $70,000 in cash in the bank, and then also having a $25,000 car loan. I could see that. I mean, that's normal. That's, called debt leverage. A lot of people do it. Mr. Ramsey doesn't advise it. And so, since you ask, I'm going to say you know darn well that you are supposed to be doing that. How can you not? How can you ask this question without knowing that you should be doing that? The main concern I have is, since I am an independent contractor, my income is not stable. Why? Hey, guess what? Your income not stable, man. guess what? Guess what? By the way, that's my bad Dana Carvey doing Joe Biden impersonation. So guess what? If you make less money one month, wouldn't it be great to not have a freaking car payment, you idiot? So justification station is what we're doing here, and just delusion knows exactly what you should do, knows exactly, because he's asking everything that he should be doing, and he knows darn well. You would have to be so stupid to not know that that's the right thing, especially after listening to Dave for 6 months. How could you possibly believe he would want you to keep the payment around? That is the most ridiculous thing I've ever seen in my life. My main concern is, Simeon Pedagogic, some months I make $2,000, and other months I make $10,000. That's fine. I mean, you can have a Hill and Valley fund, but I mean, that should be regardless of the, I mean, you still would not have any money in the brokerage account. You still would not be contributing to IRA when you, I mean, you wouldn't be contributing to your retirement if you're only making $2,000 in that month and you have $6,500. So yeah, you need to work out some kind of buffer or a Hill and Valley fund for when you don't make that much money, but that still doesn't give you carte blanche to save an additional $70,000. It does give me a sense of security. Yeah, well, do you want the security, or it's not really security because you're in debt for the car? So, I mean, that's up to you. If you want to do that, that's fine. That's not the Ramsey advice. So don't worry, you're with the masses. The masses will not follow the Ramsey advice, especially with the uncertainty in our economic climate. Justification station is where this person lives. And there's a justification station in every state, in every city, probably. Our economic climate with the economy, people say that all the time. That's got nothing to do with it. You just don't want to do it the way that Dave recommends, which is fine. You can do whatever you want. I know it's not smart to keep this much money in a money market account that is only earning 4 to 5, but this is something I've been considering for the past year and just can't get myself to pull the trigger. See, knows darn well what the right answer is. This is so stupid. We technically have some credit card debt too, but we pay the balance off each month. He doesn't recommend that either. We're 2 years into a 287 30-year mortgage. He doesn't recommend a 30-year mortgage either. You're doing it all wrong. And other than, like, at least thinking about it, and you know darn well the right advice. So, and some people won't even do that. But other than that, what do you think, George?
You're doing it wrong. You're doing it wrong. You're doing it wrong.
Yeah. And the original.
You're doing it wrong.
I don't need. I'm not on the screen at all anymore. I used to be underneath that, and it would look like the rain was coming down on me. So I would pretend to cover my head up so it didn't get wet. Any help would be greatly appreciated. Mr. Ramsey already tried to help you, and he apparently explained it very, very well, because you asked about every single thing that I said. You asked about it, so you know the advice. And if you want to be dumb and not do it, you have that option for sure. But you know the advice, and if you didn't know, millions of documented success stories, 30 successful years of giving financial information has Mr. Ramsey. And so you can do it your dumbass way, that's fine. But if you'd like to do it Mr. Ramsey's way, since you've been following him for 6 months, it's not that hard to pick up either. I mean, within 6 months, you don't even have to watch every day, and you could You could watch once a week and you would still be able to pick that up. Oh my goodness gracious me. Ball starts in 23 minutes. Let's do this one and then we'll call it a show. A big Texas howdy. Alrighty. Ramsey Money and Marriage Getaway Tickets. I am not self-promoting or trying to sell any one of these tickets. I'm asking for advice. We purchased basic package tickets for one couple for the February 13th, 14th event in Nashville, but now we can't go. I've been looking at trying to resell the tickets. Has anyone had any experience with this? I've got a pretty well-established eBay account. I mean, you could try that. And I've been looking at StubHub. Has anyone tried to sell their tickets for a Ramsey Solutions event? Just looking for any impediments or guidance anyone can offer. Thanks all. I mean, you could probably sell it on anything. Yeah, you can check StubHub to see if there's any other ones on there for Ramsey events. You can see if there's any other, and that'll give you an idea what they're worth on the secondary market. But also, if it's not sold out now, I mean, you're not going to get your money back, but I understand wanting to get back some. And so you can try that. You can try the Facebook. I don't know if they'll let you put that on in the Facebook group. The Ramsey Baby Steps community is the Facebook group that Ramsey Solutions runs. There are other ones. But yeah, I don't know if they would let you advertise that on there to do that. But yeah, you can try. I mean, Craigslist, you can try whatever you want for that. I understand wanting to get some of that money back, and we'll do a baby step 4 question tomorrow on the after show. Again, youtube.com/coachstevemoney, and my financial content is right below the Oak Island playlist. Ramsey Show, After Show, and answering your financial questions, and 11 Ramsey adjacent songs in the music playlist. And if you have got money problems, or you just want to make sure you are on the right track, you can schedule a free financial coaching consultation / assessment with me at calendly.com/coachstevemoney. The link is in the ticker below, also in the description of the video. You can email me at coachstevemoney@gmail.com. Donations can go to paypal.me/coachstevemoney. Alternatively to CashApp, $CoachSteveMoney. Also, alternatively, a Walmart gift card to, you guessed it, coachstevemoney@gmail.com. Upcoming streams, the Ramsey Show After Show, approximately 5:25 p.m. Eastern Time, Monday through Friday, following each YouTube Ramsey Show, and that goes off of YouTube at about 5:25 p.m. and the last 42 minutes or so of the video is exclusively on the Ramsey Network app. But when they leave YouTube, I inhabit YouTube Live with the after show. Alrighty, thank you so much for watching. Please subscribe, like, and comment. Yes, lightly grazed, or you can smash it, up to you, depending on your personality. That thumbs up button, much appreciated. And if you have subscribed or commented, thanks again much for that. I appreciate anybody that watches me, because there's so much other content out there. So very, very grateful that anyone would want to listen to me talk. Alrighty. As always, make smart financial decisions every day. Go Bucks.